So cola wars are now sparkling water wars, and PepsiCo firing the latest shot, buying SodaStream overnight. Like so many deals in the food and beverage space, and there have been a flurry of them this year. It's all about the changing consumer. In this case, Pepsi is buying into the sparkling water brand, one that it's already been building internally, at a time where sparkling water is growing even faster than bottled water. It's also buying into some exposure in international markets that it would like to have more scale in Western Europe and Japan. SodaStream has scale there. It's also buying sustainability, the better for the planet idea, which is becoming a lot more appealing to consumer companies. And SodaStream markets itself this way. Reusable bottles, less plastic, beyond the bottle, as PepsiCo called it. That is why it is buying SodaStream at its highest price ever, nearly $3.2 billion deal, 10% premium to Friday's price, which doesn't really tell you the story because the stock surged on the back of a blockbuster earnings report about a week and a half ago. It's a 30% premium to the average price over the last 30 days. It will be keeping SodaStream as operating it as an independent company out of Israel, led by the current and longtime CEO, Daniel Birnbaum. I talked to him last night. He told me he sees this as a good cultural fit between PepsiCo and SodaStream. And I asked Hugh Johnston of PepsiCo, the CFO, why now? There have been years of rumors that you would take over this company. You even had a partnership. And Johnston told me he really saw the progress he needed to in SodaStream. They've had a tremendous comeback story, and he feels that the portfolio is in the right place right now, especially coming off of that quarter that they just had, double-digit growth all over the world.
I mean, the stock's up 145% SodaStream over the past 12 months. And I mean, I remember a couple years ago, this was a company that was struggling with slumping sales and slumping demand here in the U.S. My gosh, what a turnaround story.
Morgan, this was a $12 stock at the beginning of 2016. It just got sold for $144 per share. Now, the reason PepsiCo shares are barely moving, it doesn't really have a major financial impact on Pepsi. $3 billion is its biggest deal in several years, actually, but not a huge deal as far as overall market cap, and they're paying in cash for this. And they see this as a real growth opportunity, both in channel and in product. Make it yourself beverages, sparkling water, two hot areas.